0.5% lower actually. So what looked like a little bit of a soft start, we've tumbled a little bit from there. Metals, of course, was your key weakness when we started off trade. Let's just revisit that list because Hindalco, Tata Steel were all some of your top losers. There's also BPCL added in there. ONGC has completely reversed its gains from yesterday. It's down about 2.5% right now. The only pockets of green continue to be, Infosys still holding up 3%, LTTS. There's, of course, Jubilant Foods, Britannia, and ITC. So some of the consumption names as well looking out in the green. Well, let me welcome on board now Anil Rai Gupta from Havells joining in on the show right now to talk about their numbers. Anil, hi, morning. Good to have you on the show. Strong summers, favorable base, all of it's managed to propel your growth in Q1. But what's the outlook for Q2 and, of course, for the full year?
So obviously, the first quarter went very well because of the summer season doing well after many years. So the summer products like air conditioners, coolers, fans did well. Overall, we also saw the industrial and infrastructure segment continuing to do well, despite the fact that there were some delays in order placements due to the elections. But I think things will start coming back. I hope the trend of the Q1 for the consumer demand continues to stay strong. But it's difficult to say at this stage because the consumer demand has been slow in the last couple of years. The first quarter went very well, so part of that could be the summer uptake. So we will see how it goes in the second and third quarter. Hopefully, we should be looking for a good demand.
Right, Mr. Gupta, what I also want to know is in terms of the switch gear segment as well as the cable wire segment, given that, real estate has started seeing an upcycle, should we start expecting better growth numbers from both these segments?
I think, the first of all, the industrial infra has been doing well for last few years. The consumer demand is definitely depend upon the real estate uptick as well. We have seen better domestic growth in the first quarter, so it augurs well for the coming times, which shows, definitely that there is some consumer uptake in these product categories, especially in the installation products which go into the residential sector. So I think if real estate continues to do well, we see it as a good sign for products like switchgear, lighting, as well as cables and wires.
Right, your exports are currently at 3% of sales and you aspire to achieve 10% of sales, right? What is the timeline for this target?
Yeah, we are making some big strides in exports in terms of getting our products approved in developed countries like US, Australia, for air conditioners, for cables. So we do believe that, we are looking at bigger numbers in the next 3 to 4 years. We've signed a couple of joint ventures in the US for selling our lighting products and air conditioners. So we definitely hope to achieve this number in the next 3 to 4 years.
Right, and just talking about exports, what geographies do you think will drive the growth for exports? Will it still the main area of focus be US?
Well, the company has been focused on the SAARC countries, the AMESA, and so that will continue. But I think the next big step in the developed part would be the US.
Right. Given the move in commodities, what is the price hike that the company has taken in the first quarter, and how much more would you need to take in the coming quarters?
I think generally speaking, the price hikes were taken in the fourth quarter of last year and the first quarter of this year. It varies from product to product because depending upon the kind of commodities being used in the products. But generally speaking, it varies between 2 to 5%. And that most of them has been taken in the last quarter. So I believe some of it will come in the second quarter as well in terms of actual implementation. The prices have been increased, but actual implementation. But we've also seen some abatement now in the raw material prices. So it's actually a very fluctuating kind of an environment, and we have to adjust to the raw material prices. So let's see how it pans out in the next second and third quarter. But as of now, the price increases have already been taken.
Right, price increases have been taken, but Lloyd's, that's surely doing well in the last couple of quarters. EBITDA positive in terms of the margin performance also. What is the outlook for Lloyd's now? Safe to say the worst is behind?
I think, I've always said that Lloyd is a longer term journey because we believe that there is huge market demand and it's growing fast. So we'll continue to make investments in Lloyd. And as far as, numbers are concerned, profitability is concerned, I think it varies a little bit between quarter and quarter because of seasonality. But otherwise, generally, it is on the positive trend.
Right. And what's your overall outlook on the margins? Will it be in the range of 10 to 11%, or do you think you can better that?
Well, non-Lloyd, Havells continues to remain between 13 and 14%, and that will continue. And Lloyd, as I said, is a journey of investments, and we'll see how it pans out. But we are looking for fast growth and market share improvements in Lloyd.
Right, and just the last question from me, Mr. Gupta, in terms of the capex, the guidance that you've increased from rupees 800 crores to 1,100 crores. So, which segments would the focus area be on? Where would the most amount of investments be made?
Actually, less of this in this year out of this is in the Lloyd portfolio. It's mostly in Havells. A sizable part is being contributed by the cable and wire expansion, which is continuing, and also an R&D center that we are putting up. So plus some investments in electric consumer durables and switchgears as well.
Okay, Mr. Gupta, thank you so much for joining in with us on ET Now. It's a pleasure having you on the show and understanding the outlook of the company going forward.
If you like this video, then like, share and subscribe to ET Now.